Welcome to part 2 of our webcast series on the changes to the IFRS Accounting Taxonomy due to IFRS 18. In the first webcast, we spoke about the changes to the taxonomy for the statement of profit or loss. In this webcast, our focus will be on the changes due to the new disclosure requirements in IFRS 18 for management-defined performance measures, or MPMs as we call them, and specified expenses by nature. Kenny will explain how the modeling for these two new disclosure requirements aligns with our general taxonomy modeling policies.
The taxonomy modeling for these new disclosure requirements aligns with our established modeling policy. Firstly, text block elements were added to the taxonomy so that preparers can capture, for example, an entire MPM note that includes both narrative and numerical information. The IASB also added elements to the taxonomy so that preparers can tag individual amounts, because we heard from our user stakeholders that having such detailed tagging provides users with useful information. The taxonomy includes categorical elements, which allows preparers to tag disclosed information by choosing from a list of options that have been defined in the taxonomy, such as true or false. Juliana, let's now dive into the tagging for these new disclosure requirements, starting with MPMs and then moving on to specified expenses by nature. Could you kick us off by explaining what preparers are required to disclose for MPMs?
Of course. Let's start by explaining what an MPM is. An MPM is a subtotal of income and expenses that is not an IFRS-defined total or subtotal and is used in public communications to communicate management's view of an entity's financial performance, such as adjusted operating profit. IFRS 18 requires entities to reconcile their MPMs to IFRS measures, disclose how the reconciling items relate to line items in the statement of profit or loss, and disclose the income tax effect and effect on non-controlling interest for each reconciling item and MPM. Here's an example of an MPM reconciliation showing operating profit being reconciled to adjusted operating profit. And this entity has also disclosed the amount of impairment losses included in the line items research and development expenses and goodwill impairment loss in the statement of profit or loss.
Thanks, Juliana. The IASB added a dimensional table for tagging the MPM reconciliation. The dimensional table consists of two axes. First, we have a management-defined performance measure axis that does not include any specific member. And second, we have a reconciliation of management-defined performance measures axis that already includes two predefined member elements, one for the value of the MPM and one for the reconciling items. Because MPMs and reconciling items are entity-specific, the IASB decided to not create specific members for MPMs and reconciling items, meaning preparers would need to create their own extension members. The dimensional table also includes line item elements from the statement of profit or loss and line item elements for the IFRS totals and subtotals, to which an MPMs could be reconciled to.
Let's now look at how an entity would tag an MPM reconciliation using this modeling. Because tagging an MPM reconciliation can seem quite complex until you get used to it, we will discuss how to tag the gray row that reconciles operating profit to adjusted operating profit first, and then move on to the red column for the other amounts illustrated in the table.
The gray row is tagged using the line items elements operating profit, loss, operating, which is the same elements used to tag the subtotal in the statement of profit or loss. Operating profit of $57,000 is tagged using only this line items element, whereas all other elements in this row are also tagged using members that convey additional information. For example, the reconciling items impairment losses is tagged using two extension members. An extension member for the MPM, in this case, adjusted operating profits and loss, and an extension member for the reconciling item, impairment losses. By tagging impairment losses of 6,100 using these two members, users are able to understand that the adjustment to operating profits relates to impairment losses, and that operating profits is adjusted for impairment losses to arrive at the NPM adjusted operating profit.
Thanks, Kenny. The NPM is also tagged using two members, an extension member created for the NPM, in this case, again, adjusted operating profit or loss, and tagged using a predefined member labeled value of management defined performance measure. Users will be able to query for this predefined member, allowing them to understand the value of the NPM adjusted operating profit.
We now move on to the other amounts in the table. As already mentioned, an entity needs to disclose, for example, how the reconciling items impairment losses relates to each line item in the statement of profit or loss, because part of the reconciling item relates to research and development expenses, and part relates to goodwill impairment loss. When tagging, preparers will need to use different line items elements to tag these amounts. For example, as you can see on the slide, the amount of impairment losses related to research and development expenses will be tagged using the line items elements for research and development expenses, which means we are reusing the same line items elements used for tagging an items in the statement of profit or loss. Both amounts are also tagged using the extension member element for this NPM, in this case, adjusted operating profits and loss, and extension members for this reconciling item, in this case, impairment losses adjustment.
Let's touch on a few more important points before we move to the next topic. Let me explain why the correct use of signage is important when tagging an NPM reconciliation. Using the correct signage can be a bit tricky for the NPM reconciliation, but getting it right is very important for users' understandability of the data. That's why the ISB developed implementation guidance to support preparers, and that guidance is applicable irrespective of how an entity discloses its reconciliation. For example, whether the entity begins their reconciliation with the IFRS measure, like in our example, or with the NPM.
One more thing worth highlighting is that preparers will not be able to verify the tagged data using calculations. And this has to do with the current limitation on the XBRL specification. However, the taxonomy includes a formula which preparers can use to validate the role reconciling the IFRS measure and the NPM, meaning they can check whether that role adds up. This formula is intended to help alleviate any potential data quality issues, specifically by detecting signage issues that may cause the rows not to add up. Unana. Let's now move on to the specified expenses by nature.
I'll start again by explaining what is required by IFRS 18. Entities presenting one or more line items by function in the statement of profit or loss, for example, entities presenting a cost of sales line item, are required to disclose the totals of specified expenses by nature in the notes, such as depreciation, amortization, or employee benefits. In addition, entities also need to disclose the amount of those specified expenses by nature related to each line item in the operating category of the statement of profit or loss. And we can see an example of such a disclosure on this slide.
In terms of tagging this information, let's first look at the left side of this slide. In blue, we can see we have the line item elements to tag totals of specified expenses by nature, which is one of the disclosure requirements. The amount of specified expenses by nature related to each line items in the operating category of the statement of profit or loss, on the other hand, are tagged using a dimensional table, which is what we can see in red here. We expect the tagging to be a bit easier than for the NPM reconciliation because the dimensional table includes only one axis with predefined members representing the 5 specified expenses by nature. Unana, could you explain how information on the specified expenses by nature would be tagged using this modeling?
Of course. It's probably easiest to explain using an example such as employee benefits. Total employee benefits is tagged using the line item element employee benefits expenses, operating. The amounts of employee benefits related to each line item in the operating category, on the other hand, are tagged using both line item elements and the predefined member for that specified expense by nature, in this case, employee benefits. For example, for employee benefits related to cost of sales, the amount of employee benefits relating to cost of sales is tagged using the line item element cost of sales, operating, and the predefined member element employee benefits. Just like for the NPM reconciliation, we are reusing elements that have been used to tag the statement of profit or loss.
Thanks, Juliana. To recap what we have covered in this webcast, for both new disclosure requirements, the taxonomy includes not only tax block elements, but also elements that allows preparers to tag individual amounts. And both disclosure requirements are modeled using a dimensional table with line item elements and members. In addition, for both disclosure requirements, elements used to tag the statement of profit or loss are being reused to tag the amount in the notes, which helps users understand the relationship between items. In the first webcast, we talked about the changes for the statement of profit or loss. And in this webcast, we talked about these two new disclosure requirements. And there are a few other minor changes to the taxonomies that we have not explicitly touched on. We now discuss how preparers navigate all these changes.
For the transition phase, the IASB created two separate taxonomy entry points, one for IAS 1 and one for IFRS 18, rather than incorporating all changes in a single entry point. This should help preparers navigate the taxonomy. And to provide further support, there are also tagged illustrative examples on our website, which preparers can use to educate themselves. However, given the substantial changes to the taxonomy, we strongly encourage our listeners, whether they are preparers, users, or other stakeholders, to familiarize themselves with these changes well in advance of the effective date of IFRS 18. That concludes our webcast series on the changes to the taxonomy due to IFRS 18. We hope you found them helpful. In case you have any questions regarding this webcast, feel free to fill out the email form with your query by clicking on the Contact Us button on the webpage.